we're going to be talking about the truths of trading, harsh realities, and just must knows when it comes to trading. So first of all, success in trading is not just technical analysis, which is why we're talking about mindset today. It's more than just understanding supply and demand and taking trades. Obviously, that's very important, and that is what you guys are learning from me. But additionally, it's the way you approach the market. Strategy and approach are two different things. We could all have the same strategy, but all of us have kind of slightly different approaches, and we all have the same strategy. So with trading, success, it doesn't matter about swing trading, day trading, scalping. It's more about the way we approach the market with our mindset, with our habits, following our plans, and being very strong psychologically. For a lot of weak-minded people, trading can break them, honestly. So you have to be ready to come into trading with a strong psychological framework. And we're going to be talking about how to build your psychological framework. So first of all, you guys just have to know what trading psychology is. So if we're just talking about the definition of trading psychology refers to how well you can perform over a long period of time. So this also includes life factors. One of my students, Joel, when he was in my program, his brother died. Some of my other students have gone through divorces during the program. All of these types of situations, depression, stress, anxiety, fear, life situations, overworking, all of this type of stuff, we have to still have a strong trading psychology, no matter what else is going on in our life. And one of my students, Dylan, he recently became a full-time trader back in March. So he's officially been a full-time trader for around 2 months now. And he mentioned to me that in his own personal life, he's kind of like a different person than his trading life. He puts his own personal life aside. And then once he's in trading, he is in a different mindset. And for a lot of you guys, especially, like my student Joel, his brother died. You have to put that aside to trade successfully. You can't let grief or these emotions that overcome you affect your trading. So in trading psychology, it's very important to understand your emotions, your behaviors, and your thought patterns that influence your trading decisions. Some people might feel overconfident because they heard some news report and they're like, hey, I'm going to take calls and I'm going to risk my entire portfolio. Well, that is an emotional decision and that influences your trading behaviors. So, we're going to be talking about how to understand that. And pretty much every trader has unique psychological patterns. It could be on their upbringing, experiences, their environment, and these patterns influence how they perceive and how they react to market movements. So, for example, if you came from a low-income family, maybe you would be really fearful and anxious to take a risk because you've always been taught ever since you were young and you're conditioned to save your money and you were never taught to use your money to grow your money. So those types of things your upbringing directly influences how you perceive and how you react to the market. So our job as traders is to become better self-observers. This is why we all journal. Not only do we journal technical analysis, but if you find that your emotions played a factor in your trades, whether the emotion caused you to hesitate and you missed a winning trade, or the emotion caused you to just irrationally get into a trade due to FOMO or something like that, we need to be our own self-observers and we need to catch the worst things that we do that are influenced through influenced through emotional decisions. And then also we need to figure out what are the best things that we do that we're just solely influenced by our analysis. So in trading, there is going to be a time where you're going to be stressed out, you're going to be uncertain, and you have to stay composed during those emotions. You do have to find your edge. So for example, I would feel like one of my biggest edges in trading is just risk management. Last month in May, I had my lowest win rate month that I've had in over 2 years, and I still hit my highest month of profit. And by the way, for the past 6 months, I have not sized up my positions. I've been trading with the same exact position size this entire year, and I still had my highest month of profit with my lowest win rate month. So that's risk management. Those are one of my edges. So to go more in depth on this, the market is constantly changing. And as traders, we have to be open to different market environments. Think of it this way. I've been trading for 5 years now. Over the past 5 years, if you guys been following the market, We've been in uptrends, we've been in downtrends, we've been consolidating markets, fear of recessions or mass euphoria, a bunch of different market conditions, and we have to trade according to the story that the market is telling us. So for example, like back in November, October last year, we were in a slight little downtrend for 2 months. And during that downtrend, I had to adapt my trading strategy because all of the demand zones that were previously very reliable in the uptrend, now all of them were just getting broken and broken and broken below. And actually, during that period, I made a post about it. And I had an 80% win rate on puts, and I only had a 50% win rate on calls. So what I decided to do is, hey, maybe I'm going to size down on call positions, or maybe I'll take less calls. Maybe I look for more confirmation. Maybe I pay attention more to order flow instead of price action, or paying attention to indicators, or also having closer take profit levels for calls, but further out take profit levels for puts. Those types of things are examples of adapting to market conditions. We have to be open to those different environments, and we have to trade according to what the market is telling us. So, but it's like easy, like it's still there, but also it's really hard and it's far from easy. And what's often left unsaid is sometimes there's sleepless nights of back testing, trying to figure out what's going wrong. What should you do to change? Sometimes, there's a constant search for a balance between trading and life, because even if you went full time with trading, you wanted to quit your 9 to 5 job to stop working 9 to 5. So if you're like obsessed with trading, kind of like how I am, sometimes it's hard to find a balance between like, okay, should I step away from the screens, or should I stay on the screens, or, staying emotionally disciplined under immense psychological pressure. This is why like I'm not really like sizing up my positions too frequently, because if I was, that would cause a lot of psychological pressure. So let's say, last month, if I was doing that, instead of a position size, I'm actually very comfortable with the low win rate month, I would have had, it would have been really hard to keep pushing, seeing all those losses and keep pushing. So you have to be at an area, not only, a position size that you're comfortable with, but what I'm talking about is like in trading, the path is just filled with challenges. It could be, any of these factors. But there is a silver lining, because for me, like, for example, I was once a beginner. I used to be making like $1,000 a month. My first trade, I made $20. I only made $20. Some of my other students, I see like their first trade, they make like $1,000. Well, my first trade, I only made $20. So like I was standing exactly where you guys were. And you have to remember that the most celebrated traders out there, like, all of these Instagram influencers, or even the guys who like write books or on Wall Street, all of us face losses, but through resilience, we were able to turn our small capital into significant wealth. And that's through dedication and, continuous learning and continuously working towards it. And in reality, like I'm here to help you guys become profitable traders, of course. But like, let's think about it this way. My student Dylan, he joined my mentorship program back in like August 2023. He went full time with trading in March. So there was like an 8-month gap or 9-month gap between, when he started and when he went full time. So during the first 4 months of my mentorship program, yeah, he was seeing more consistent wins. He was managing his risk better. He was taking better trades, but still it continuously goes. It's a continuous process, and the success doesn't happen overnight. So you have to focus right now on a solid foundation. And also you have to be very committed to persistence. And if you are very persistent within trading, the rewards will just be life-changing. So to all my beginners here, focus on the strong foundation, and that could start with trading psychology. And the road might be long. Some of my students, they had initial success with their first trades, and then the next month they get knocked down, and then they're like, oh, I don't know why it's not working, but it's working. You're taking good trades. You have a solid foundation. You just have to keep going, and the road might be long, but the benefits far outweigh the risks. So let's continue. How do we create like a good, strong psychological framework? For me, what has really helped me is like establishing a solid routine and a disciplined trading environment. And consistent routines have allowed me to reduce stress and improve my focus. There are some days where, maybe I'm a little bit more stressed days. Like, for example, like I think this past Wednesday, I only posted like one plan that I kind of knew like it wouldn't happen. So I didn't take any trades that day because I didn't really want to take any trades that day. I wasn't focused on like 3 different trades. Same thing with like Friday. I put a plan. It kind of happened like with NVIDIA, but I didn't take any trade. So regardless of the fact, every day I still come to the market, I still show up, and I have a really consistent routine that allows me to even like set up my whole process, even if I don't necessarily feel like it. If I have confirmation, if I have my plan, arise, then I'll take that trade. And I know a lot of you guys, like for me, I'm a full-time trader. I like roll out of bed and then I start trading. But if you guys have like a busy schedule, I know some of you guys like are literally at a 9 to 5 while you're trying to trade. So if you have a limited time to dedicate to trading each day, it could definitely be a little bit harder to plan out your trading journal, especially to plan out your trading day and to journal and like reflect on your previous trading day, like amidst busy work and running errands and all that type of stuff. I've noticed a lot of my students, they kind of use this as an excuse to not journal their trades or not send their trades over to me and not reflect. But if this sounds like you need to recognize that success in trading isn't only what you do in market hours. So if you're very busy, instead of a pre-market routine, you can have a post-market routine, and this will definitely save you. So like, let's say you took trades and you're working a full-time job. Well, after your work, when you come back home, 6 p.m., 7 p.m., or, some of you guys might work night shifts in the morning, then you could journal your trades. Then you could analyze them at night. And also, like, let's say you have work at 7 a.m. or something like that, or like 5 a.m. before the market opens, depending if you're like Eastern Standard Time or Pacific Time. And you don't necessarily have time to pre-plan your trades in the morning. Do it at night. So, maybe like a post-market routine instead of a pre-market routine. So at the end of the day, you journal your trades. You journal all the trades you took in the day, analyze what you did right and wrong, and think about how you can improve for the next trading day. The most important part of journaling is not just like to write it down and send it over to me. It's to like figure out, what did you do right? What did you do wrong? How can you not make those same mistakes the next day? How can you repeat what you did today for the next day? You have to really think about it. And at night, you could do your chart analysis to plan for your next day as well. Like nothing really changes overnight unless you're like charting a future. So if you're like charting Apple, NVIDIA, Amazon, Meta, whatever, you turn off extended hours trading sessions. It looks the same until the market opens. So at night, you could do your pre-market routine. And there, obviously you create your plan. You determine where you want to enter. You determine where you want to exit for stop loss and take profit. And, if you don't even have time to trade while you're at work, at night, you could place your limit orders the day before. So at the end of the day, it's all about, you need to change your schedule to fit your trading now. And if you're not willing to do that, most likely trading isn't gonna be good for you, because it requires a lot of discipline, it requires a lot of structure, and it requires to have a system and consistent, repeatable process. So this is what I always say, like, how could you expect to be a consistently profitable trader if you're not even consistent in the way you approach the market? So that's what we're talking about here. And I would really say consistency in your daily routine is key in trading. If you can't like do this on a daily basis, you need to have some sort of weekly routine and focus more on swing trading. So like, instead of marking up like 1 hour zones and 2 hour zones, focus on the 4 hour and above. Try to swing trade from your 4 hour zone to your other 4 hour zone, place limit orders, and have at least like, hey, Sunday, I do my analysis. I place my orders. Wednesday, I check on my trades. Maybe I do a little bit more analysis. Maybe I could take another trade. And then Friday, I review all my trades. I put it all in my journal. And, if you're like swing trading, that's something you could do. Either way, you need a consistent routine. And then for those of you who can do pre-market routines, like for me, I do pre-market routine. And especially if you guys go full time with trading, you need to develop a pre-market routine to prepare mentally and physically for the trading day. So like, for example, what I do is like, I wake up in the morning, I analyze my charts. Then I create my trading plan. Then maybe I check market news. And then after that, I I do it really early. It's like I post it usually by like 8:30 a.m. and then the market opens at 9:30 a.m. So usually I have like an hour between that. And then that could give us enough time to do like market or like morning rituals and mental preparation. So a lot of what I heard from successful traders is that if you have a routine before the market opens, it really sets the tone for your trading day. And it creates a very structured environment that promotes discipline and focus. Like, for example, even while I was traveling, I had a consistent routine, even if I was in a different place every month. And it's just all about having simple, consistent activities. It could be like, going to a desk instead of trading in your bed. This is kind of like a bad habit I used to have like a few years ago. I would just grab my laptop and just try to trade in the bed. Half the time I just fall back asleep and not take any trades. So instead, my ritual is like, get out of my room, come to my office, sit on my desk, do my analysis, maybe listen to some music. Like if you listen to like the same type of music, I know there's one trader, he listens to the same song, but like 5 minutes before the market opens. And the song is like best day ever or something like that, to subconsciously program his mind every single day. And not only has he been doing that for years, but on his best trading days, he did that. So it's like reminds him of those days and reminds him to consistently improve from now and forward. So, just having some sort of preparation is going to help you start the trading day with a clear plan and reduce the likelihood of impulsive decisions. So, like, for example, I know one of my students, he works construction and he's literally there 7 a.m. Eastern Standard Time to 7 p.m. Eastern Standard Time. And if you don't have like a routine, even while you're at work to trade, that's consistent, he could just like go in the porta potty at his construction site, open up TradingView and just take random trades irrationally. So you don't want that to be you. You don't want to just take random trades. Instead, maybe like he has it consistently 9:15 a.m. He goes to the porta potty. He does his chart analysis. He places his limit orders. Boom, he's set for the day. At the end of the day, he'll check on his trades. Like as simple as that. Like instead of being like, oh, it's 12 p.m. or like it's 1 p.m. I have a little break. The guy's 5 minutes late. Let me just take a trade now. You know what I'm saying? So it's like those slight little subtle shifts that could enhance your consistency and improve your discipline. So it also allows you to have clear focus. Just at the end of the day, structured routines help clear mental clutter. And right now, I know like a lot of you guys are used to already having a routine. You guys work jobs 9 to 5. When you do that, like whenever you go to work, you just immediately get in the zone because you know what's required of you at work. So the same thing. It's the same thing with trading. Even if you're trying to quit your job to be a trader, you're your own boss. Literally, no one's going to tell you, hey, do this or do this. So you need to move away from relying on someone else to hold you accountable, and you have to start holding yourself accountable. So what has helped me is just having like rules and a rule-based system, and we're going to go more in depth on that. And then also like, of course, having a clear trading plan. A lot of my students who, they've improved from this, but before, like whenever we first had our first call together, like all of you guys took the first call with me, they would tell me, oh, I never follow my plan. But then I asked them like, hey, did you have a written plan? Did you know where you're going to enter and where you're going to exit? And they're like, no, not really. So like you didn't have a plan. So in the pre-market or post-market, whenever you're planning for your trades, everything should be meticulously planned so that you could follow it point to point. And then by the end of the day, when you're journaling, the whole goal of deciding if you took a good trade or a bad trade is, did I follow my plan? Okay, then that was a good trade. Did you not follow your plan? Even if that was a winning trade, it could have been a bad trade. So it's really important to not think that just because you took a winning trade, that was the right thing to do, because it could have been made on impulse or rational decision making. And then from there and forward, you kind of ruin your own trading because of your psychological issues. And you get stuck in bad habits. So that's very important. So at the end of the day, trading is all about probabilities and it's not about certainties. So the only thing that could help us maintain our edge in trading is having rules and following those rules consistently. Like for me, like in the past 370 trades I've taken, I have a 67% win rate and nearly a 1-to-4 risk reward ratio in the past 300 trades since 2022. And if I just continue following my rules, I could expect similar type of results because I have an edge. So I understand it's all about the probabilities. I could lose 10 trades in a row, but that doesn't that doesn't make my edge invalid, because at the end of the day, if you look at the bigger picture, out of the 100 trades, I still would have won more trades than I lost. So that's also important. And I would say also too, like having actual self-esteem and plays a big role in your trading. So like in your own life, if you're like just depressed and you don't have any self-esteem and you just always have negative self-talk, that's going to directly transfer into your trading. So you need to not only build confidence in your own life and work through your own issues, but you also need to do that in trading. So what you could do to build your confidence is like back test, paper trade, build numbers. It's literally all about numbers to be profitable, guys. It's the win rate, the risk reward. That's all it takes. Everything else that we do is just to improve our probabilities, improve our risk reward. And so we could be profitable. So also like what I've seen is I was talking to this one guy. He didn't end up joining my program, but his girlfriend every single day, whenever he went to trade, his girlfriend would be like, you're going to fail at trading. You suck at trading. You should just quit. Like she would literally talk to him like that it became his own inner dialogue even years after they broke up with each other. So it's also really important to make sure you surround yourself around people who support you and who don't talk negatively to you. If they talk like that, just remove them from your life, because they're not going to allow you to reach your goals. They're kind of like a rubber band. Like I don't have one on me, but like if you try to go away from them and then the further you go, that band is going to snap if you stay closer to them, and you're going to get hurt. So instead, you have to detach yourself away from them, because if not, you're going to continuously get hurt. So the people you surround yourself with is very, very important. Like it's actually crazy. So if you want to move past that, you need to change your circle. From there, like we could talk more about internal and external validation. So like, for example, whenever you guys reach out to me and you're like, hey, is this chart analysis good? Is this trade good? That is relying on external validation, like approval from others. And sometimes, if I don't give you that type of validation, that could lead to stress and poor decision making. But at the same time too, obviously, my whole goal is to help you improve, but it's really important to avoid comparison. This is a trap that I've seen like one of my current students getting stuck in, and they're constantly comparing themselves to like my other students. And the important thing is that each trader's journey is unique, and success is defined by your progress and your achievements, not anyone else's. And you're not going to improve by just like constantly looking outward. You need to start looking inward and find a way to get your own internal validation rather than relying on others. And from there, like I know, like for example, for me, I started off with mentorship. I think some of you guys know my story. And like pretty much my first year trading, I was profitable. It's not the same thing for a lot of other traders. Like there's one trader who I'm friends with, and he lost like $75,000. He was just red every single year before he became a profitable trader, and now he's one of the most influential people in the trading space on social media. And every trader's journey is unique. Now he makes that in like a couple weeks, what he was losing for years. So it is hard to push through that. Like none of you guys should face that if you guys have proper risk management. It's not gonna happen. But at the same time, like you wouldn't want to compare yourself to someone else. Also, another thing is like screen time and experience. So there really is no substitute for experience in trading. Screen time and the hours you spend observing the market builds intuition and expertise that really no book or mentor can teach. So you need to maximize your screen time. So all of you guys want to treat trading like a profession, and you want to dedicate regular hours to studying the markets and executing trades. Let's say you have a 7 to 7, like one of my other students. And then at the end of the day, maybe you have like 30 minutes to an hour to study, and you don't necessarily have too much time to actually look at the market. Well, on the weekends, put 2 hours a day into screen time, something that's at least a little bit consistent. And pretty much my conclusion over around 2 years now of coaching is that effort is what makes traders good. That's really what I've noticed. Like if you put effort into your trading, no matter how much time you put into, but if you have effort and you manage your risk, you put an effort and you manage your risk, that's what I've noticed. Like a lot of traders, succeed from that. Like one of my students, he has $1,000 account. This guy is making like $3,000 a month from $1,000. He's been on a roll. But also, like, that doesn't come out of nowhere. He said he didn't sleep basically for like 4 months. Like literally. He worked every hour in the night with his job. And then after that, he came on to trading. And then after trading, he went back to work. Like this guy literally did not sleep. And that's a lot of effort. And he had a lot of discipline to do that. And then what I noticed as well is like the best traders have routines. And I think routines are necessary for efficiency. And, you know, there's like two types of routine. Like, for example, whenever I go to the gym, like I might have a routine for the gym and I might just do like the same exact workout every single. And like, let's say I'm just doing curls. I'm like 1, 2, 3, 4. Like it's kind of boring. So you guys want to make sure that you guys have like some sort of connection with your routine. There's something that makes you enjoy your routine. If you stick to a disciplined routine, make sure that you enjoy your routine because if not, it's going to be really hard to enjoy trading as well.